Okay, for this video, I wanted to talk about the Michigan State Earned Income Tax Credit. Right, so the federal Earned Income Tax Credit, very popular, very well known. This is claimed on your Form 1040 tax return every year. And generally, taxpayers that are individuals or married couples with qualifying children can claim this credit when they have earned income. Individuals that don't have any qualifying children can claim it as well if their income is below certain thresholds. But what's important is that many states, Michigan included, have their own version of the credit. Right? So if you are eligible for the credit at the federal level, you might get an additional credit at the state level. So in order to start the process, you first need to prepare your federal return. And that's because Michigan, like other states, takes a percentage of the federal EITC amount. So you can't do the Michigan piece without having the federal done first. So in this example here, we have John Q, taxpayer. He's a single filer, no dependents, so no children, but his earned income is low enough to where he meets that threshold where you can get the EITC if you have no qualifying children. So John's first step here is to complete the credit worksheet and compute the amount of his federal EITC. So $18,000 is his total earned income, and if we look at the EIC tables for 2021, you should always use the tables for your given year. For an individual with no qualifying children, $18,000 in earned income, he's going to get $521 as an earned income tax credit. Okay, so John then reports that on line 27A up here, right? So 27A EIC for 521. Now that he's got his federal credit calculated, he can move on to the state. So John jumps down here to his state return. So this is just a very simple Michigan resident tax return, right? So John is a resident of Ann Arbor, Michigan, single filer, and his 2021 residency status is a full year resident, right? So he's not a part year resident. Now the EIC amount is computed on page 2 in the refundable credit section. So you'll see here, line 27, we have the earned income tax credit. This is the credit that is pulled at the federal level, right? So that was the amount of his federal credit, right? Remember, $521. Now, Michigan's state piece is 6% of that federal amount. So 6% times 521 is a $31 credit. And so that's going to be the state portion on his Michigan return for his earned income tax credit. Now, 6%, not very much, right? I mean, frankly, if you look at some of the other states, they're 30%, 40%, 20%. So Michigan is quite low, frankly, when you compare them to the rest of the states that have this program available. But nevertheless, it's still money, right? And so if you are claiming the federal income tax credit, or the earned income tax credit, rather, for federal purposes, make sure you're also capturing it for state purposes, because every little bit helps, right? You want to lower your tax liability in Michigan and at the federal level as much as the law provides, right? So that's the 31 credit that John is going to be able to claim on his Michigan return, and so ultimately that'll impact the bottom line number as to how much he owes or what his overpayment might be. Okay, so that covers it for this video. Very quick and simple. The message here is, if you are a Michigan tax resident, make sure that you are claiming all the available Michigan deductions and credits that are available. Again, if they apply at the federal level, there might be a similar state program. So don't just claim the federal income tax, the earned income tax credit, and omit the state one. If you are eligible for both, make sure you take both. Okay, so that covers it for this video. Thanks so much for watching, and I look forward to seeing you again on the next video. Take care.